The small business CGT concessions are incredibly underrated. If you are running a business and considering selling, you need to make sure that you satisfy the small business CGT concessions, because when you sell, and if you successfully get these concessions, you basically get the sale amount tax-free if you apply it the right way. So the first basic condition to satisfy is you must either be a small business entity, so you're carrying on a business, and in the previous financial year you had turnover of less than 2 million, or you and your group and affiliates have less than $6 million of net assets, which excludes your home and your super. Additionally, you need to satisfy something called the active asset test. So an active asset is something that is used or held ready for use in the course of business. What is held ready for use in a business? Look, we don't really know, but if it's inherently connected, that's the key phrase, then it will be an active asset. There are also lots of additional considerations if you're selling shares in a company or units in a unit trust or something similar. There are additional testing requirements for those entities. Now, say you satisfy all the criteria for your sale, bang, you're in. What do you do now? You've got 4 different concessions to choose from. The first one is the best one. If you've held that asset for 15 years, you get basically a full-on exemption called the 15-year exemption. Very unimaginative. If you don't get that, have a look at the other one. So the next pretty good one is an additional 50% CGT discount, which can apply even if it's a company making the gain. But if it's an individual or trust, you can apply the general 50% CGT discount and then the small business 50% CGT reduction. This means you've only got 25% of your gain to go. The last 25%, you can also contribute up to $500,000, sometimes more, depending on how you're structured, into superannuation, and you can reduce your gain to 0 that way. If you choose not to do that, or you still have some left over, you can then apply a special rollover. So you can defer that gain for 2 years, potentially up to 5, I think even 6 years, if you do it just the right way. And if you use that money to buy a new business asset, small business asset, you can actually have that gain completely disregarded. So often how it goes is that you've been running a business and you sell it for, a couple of $1 million. You can then buy a brand new business or invest in a new venture and grow your wealth incredibly quickly doing it using these small business CGT concessions.